Now guys, I am going to discuss the agenda of this S&P 500 Technical Analysis, which is from July 31st, 2023 to August 4th, 2023. And the first point of the agenda is the S&P 500 Technical Analysis on the weekly chart. Again, weekly chart means the big picture, the hawk eye view, means what is going to happen in the S&P 500, in the Dow Jones, in the Nasdaq, and in overall US stock market in a month or in a quarter or so. That is the weekly chart. Okay, as of now, weekly chart, particularly in case of the Dow Jones, okay, it is heavy. Means we can say that Dow Jones is again, it is trading at these extremely saturated technicals. So I will discuss this thing in very detail. Then comes the second point of the agenda and most interesting part of this S&P 500 Technical Analysis, and this is the curious case of Dow Jones 1987. Okay, so I will show you through the charts that what has happened exactly in 1987, and what was the movement for 2 to 3 weeks. So this way we can anticipate that if the same movement, see, as of now exactly the same movement is seen, that if the same movement is going to be followed, in that case what will happen on day 14th, day 15th, day 16th, and so on, right? So, and other than that, I will also discuss the Fed chairman's press conference. Okay, so it was not about this the 25 bps rate hike. Okay, so 25 bps rate hike, the market, the US stock market, okay, it did not give much reaction. However, the stock market reacted heavily during the press conference of the Fed chairman, and this is exactly what I mentioned last week also, that do not expect a movement in the stock market when the rate hike is announced. Rather wait for the press conference, and whatever is going to happen, it will happen during the press conference. And what will be the result? Result will be that if there comes positive news, okay, some positive comments, then it will be able to move up towards 4609, okay, and more positive means 4633. And if there comes negative comments or neutral, not neutral but negative comments, okay, a bit negative, then it will be coming down to the zone that is from 4537 to 4527. Below 4527 means it will go bearish. As long as it is holding above 4527, it can hold, it can go bullish, not a problem. Okay, anyway, so I will discuss this thing in very detail. Then comes the third point of the agenda of this S&P 500 Technical Analysis, and in the third point of the agenda, okay, I will discuss the support and resistance levels for the S&P 500, like 4633, 4609, 45. Okay, similarly I will give you like some other the support and resistance levels, and we will see that what will be the range, what will be the range for the next week. Okay, probable range for the next week, support and resistance levels. And guys, once again, these support and resistance levels are my own calculated levels. Okay, these are not the standard pivot levels that you are going to find anywhere. Okay, and you have seen yourself the accuracy of these levels, right? Anyways, then comes the fourth point of the agenda, and the fourth point of the agenda is the S&P 500 Technical Analysis on the daily chart. See, this was the weekly chart, means the big picture, the hawk eye view. Daily chart means, see, this is the fall we are this is the fall, okay, that you have seen here, very heavy fall. Okay, this fall was actually the result of the combination of the daily chart as well as the weekly chart. Okay, so primarily it was the daily chart of the Dow Jones, not the S&P 500 but the Dow Jones, right? So we have seen this is a very heavy candle. So again, I will do the technical analysis on the daily chart, and I will tell you if the technicals have changed, if they have changed, then what we are going to see, whether it will be bullish or bearish. Okay, what kind of movement. Then comes the last point of the agenda of this S&P 500 Technical Analysis, and the last point of the agenda is the S&P 500 probable movement from July 31st to August 4th. I will tell you that what is expected to happen next week in the US stock market, primarily in the S&P 500, but that will happen through the Dow Jones. So far the conditions are like, okay, where the Dow Jones is heavily saturated, and Dow Jones will impact the movement of the entire US stock market. So we will see that what is going to happen in the S&P 500 through Dow Jones, right? So from July 31st to August 4th, the movement of S&P 500. So guys, one more thing that I would like to add a disclaimer to this S&P 500 Technical Analysis, that because I do not know what you are going to trade into and how you are going to trade, which is why whatever profit and losses are going to happen to you are all yours. So there is one more thing, that next week on Thursday evening, on August 3rd, Apple and Amazon are going to post the earnings. Means the next Friday will be August 4th 2023 will be heavily volatile because of the earnings of Apple and Amazon. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, if you might not be aware of this thing, then the stock market opportunities are now the part of the daily analysis of the S&P 500. Now guys, I am going to discuss the first point of the agenda of this S&P 500 technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. W as in weekly. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now if you look into this, the candle, last weekly candle, okay, then it's a bullish candle, right? Closing of the candle was at 4582 and the low of the candle was 4528, right? If there would have been a red candle on the daily chart on Friday, in that case there we would have seen an inverted hammer on the weekly chart. That inverted hammer, okay, inverted hammer would have been seen as a significator of the further bearish movement in the S&P 500, right? But because of the core PCE and the PCE data, we have seen that they have pushed the S&P 500 higher and closed the S&P 500 at 4582. Because of that, we have seen, okay, this is the weekly candle, that is a green candle, right? So when we interpret this, this is the weekly candle, then as such there is no defined shape of this candle. It's just a normal bullish candle, normal weekly bullish candle. This means that this candle is simply giving the bullish sentiments and nothing else. These bullish sentiments are neither low nor high, okay, just the bullish sentiments because of the formation of this kind of candle. That's it, nothing else. Now let's see what the technical indicators are saying on this, the weekly chart. So in terms of the technical indicators, if you look into this, then S&P 500 on the weekly chart is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud, okay. As such there is no problem here. And the MACD is further giving the bullish, okay, the bullish sentiments, not sentiments but the bullish movement, supporting the bullish movement. Stochastic RSI on the weekly chart is also supporting this, the bullish movement, okay. Stochastic RSI, it might create some problem for the S&P 500 because next week on the weekly chart, stochastic RSI is expected to hit 100, okay. As of now I cannot confirm whether it will hit absolute 100 or not. Only when the stock market opens on Monday, then only we will come to know whether it is going to hit 100 or not, okay. So on the weekly chart, stochastic RSI is going to hit this, the 100, okay. So when it hits 100, okay, in that case we can expect a break in this, the bullish movement, right? This is what happens, okay. This is the meaning of this thing, okay. Now comes the most important part here, and that is the overbought. Yes, on the weekly chart the S&P 500 has entered into the overbought condition. It was already in the overbought condition on the daily chart, okay. But now on the weekly chart it has entered into the overbought condition. Other than that, the divergence is heavy. Further it is going to hit the historical levels not seen, okay. So it's been like 2 years, okay. Whatever is happening in the stock market now, the same, okay, we have seen last time in quarter 3, quarter 4 of 2021, 2 years ago, okay. So as of now, so we can simply say that S&P 500 is it is bullish, no doubt. It is 100% bullish through all of the technical indicators. At the same time it is overbought, okay. It is in this, the overbought condition, and it is overstretched, okay. There is saturation, but it is not absolutely saturated. There is no absolute saturation. It is saturated, but it is not absolute saturated. So means this the absolute saturation. Okay, absolute saturation, what happens is that when there comes an absolute saturation, then this kind of movement is seen. Okay, so there was an absolute saturation in case of the Dow Jones. Okay, it hit the absolute saturation, okay, as early as on Tuesday, okay, then on Wednesday further, but finally it hits its critical saturation on Thursday when there came this the gap up open. There was a critical saturation, right? And this was my pre-market update on July 26th. So I mentioned this thing that yes, there is one more very important thing, and it's about the Dow Jones. Dow Jones is extremely heavy. It's very heavy in terms of everything, and is holding for some unknown reasons. We call that manipulation. And this means if there comes any kind of bearish sentiments through FOMC decision or the comments of the Fed chairman, then Dow Jones will take a very heavy hit and will bring everything down. And even if the Fed signals bullish sentiments, then also Dow Jones won't be able to give very heavy movement, and any kind of heavy movement will be limited. And then Dow Jones will have to take a break as it's extremely heavy and is trading heavily against technicals. And even before the open of the stock market on 27th, Thursday, I mentioned that Dow Jones is very heavy as compared to the S&P 500. Dow Jones is susceptible for a fall anytime, any day, any moment. So this was because of the oversaturation or absolute saturated. So I hope this thing is clear. So guys, again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the curious case of the Dow Jones. Curious case of the Dow Jones 1987. And also I'm going to discuss the comments of the Federal Reserve Chairman as well as the FOMC decision, right? So these two things. So at first, let's discuss the Federal Reserve Chairman comments and the FOMC decision. Okay, then we will talk about the interesting part, very interesting part. Okay, historically I will show you through the charts. Okay, 1987 chart. Okay, that what means what kind of movement we have seen, and then we will relate that movement to this particular movement. Right. So at first the FOMC decision. Okay, so the Federal Open Market Committee decided to raise the rates by 25 bps, and the stock market was already expecting this hike. Okay, which is why there was the stock market was not giving any specific movement. Okay, this was already it was already considered by the stock market. So this was the press conference of the Federal Reserve Chairman. Okay, and this is a summary of the press conference. So the Federal Reserve Chairman has not given any clear answers to the questions asked by the reporters whether the Feds are going to raise the interest rates in the next meeting or if this was the last hike. Okay, so he has simply said that if the data demands, then the Feds may raise the interest rates, and they may raise the interest rates as early as September. Okay, so the next meeting is on, I guess, 3rd of September. That this the next FOMC, 3rd of September or in the first week of September. Okay, August there is no meeting. This means that there is a break in August. Now he said that the Feds will meet in the month of September, and if the data suggests, then yes, there will be another rate hike. However, whether to raise the rates in the next meeting or not will depends on the upcoming data. Data means the PCE, core PCE. So we have seen yesterday on Friday that there was this the core PCE and the PC data that was better than expected. That is why we have seen an unexpected gap up open, and then this the heavy movement. Sorry, not the heavy movement, but a limited bullish movement in the stock market. Okay, but there was this the bullish movement because of that data. Now the Fed says that they may pause the rate hikes provided they are confident that inflation has cooled down and there are only a few chances that the inflation will move up once again, right? But there was an additional part to this. He said that the Federal Reserve may pause the rate hikes provided they are confident and provided that several months of data is convincing. several months of data is saying that now the inflation will not move back to the levels, okay, where it was. So he has used the word several months, not month but months. Several months means 5 to 6 months or 6 to 7 months, means on an average you can say 6 months. Now one more thing that he has again cleared very much, okay, he has cleared this thing, that the Feds will not go for the rate cuts until it is confirmed that everything is under control, and most likely either in quarter 4 2024, okay, or in the year 2025, okay, means this is the month of July, okay, this is July end 2023. After 1 year, okay, in quarter 4 means October, November, December, okay, so in that quarter 4 2024, Feds may go for the rate cuts. If not, then the Feds will go for the rate cuts in 2025. This means that as of now the rates, okay, this the rate interest rate is 5.5%. This interest rate will remain as is for 1 year or for more than 1 year. If there comes more rate hike, then this the more like 5.75%, okay, or whatever will be the interest rate, that will be there as is for 1 year or for more than 1 year, and that is the problem. Okay, so yes, so I will also cover the recession part, okay, whether there will be a recession or not, right? So now it is clear that the Feds will not go for the rate cuts until they are very much satisfied that the data, that the inflation will not give, okay, that kind of heavy reversal, okay. And yes, pause may come early, like quarter 1 of 2024, okay, or by the end of this year, Feds go for a pause, permanent pause, that okay, now there will not be any more rate hikes, but they will not go for the rate cuts, okay. So pause is one thing. Pause means that Feds are not going to raise the interest rates, means they are not going to create any more, or they are not going to put any more pressure on the economy, but it is in actual, it is the rate cuts, okay, for the economy to perform better or much better than expected, for everything to normalize, the rate cuts are required. So we have seen that the Feds have moved up like from 0% to 5.5% in 1 year, okay. So that is like very aggressive rate hike. So the rate cuts means that when the Feds go for the rate cuts, then there will be the true bullish movement, the long term bullish movement, okay, that will begin when the Feds starts, okay, the rate cuts, okay. And as of now, okay, pause, and yes, pause may be there. So let me take you back to 1987, okay, let's see what has happened. And remember, okay, before 1987, first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 13th, and 14th, okay, then 15th, right? Now back in 1987, it was the month of January 1987. Now the first bullish candle was formed on 2nd of January 1987, okay, first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 13th. This was 13th, okay. We have seen in between, technically bearish candle, but still Dow Jones, okay, didn't react much to that, okay. So we have seen 13th. This red candle is 14th, right? Then we have seen 15th, that is the bullish candle, 15th bullish candle. Then we have seen 16th. 16th was a very heavy bearish candle, okay. And you will be surprised to know that intraday 7% fall, 7% fall intraday, 7%, okay. This is why I mentioned many a times that in S&P 500, 4 to 5% fall within a day, okay, we have seen it, okay, earlier happening. So but this, the 7% fall, and means 4 to 5%, it can still happen in S&P 500, okay. It is not a big deal. Post COVID, the situation in the S&P 500 is that not just S&P 500, but the US stock market and the global stock markets, we have seen that earlier we used to see, very limited movement every day, very limited movement, very small candles, but post COVID, we have seen very heavy candles. Okay, whether it's bullish or bearish, these are very heavy candles. Yes, bullish candles are normal, but bearish candles are very heavy. Okay, so now I hope this thing is clear. 13th, this was 14th, a red candle. Remember in our case, okay, 14th red candle, 15th green candle, right? A very good green candle. 16th, 7% fall intraday. 16th, and then again a resumption of this bullish trend, right? And then this was there moving up, and then it entered into a small correction in the month of April. In the month of April, okay, it moved up again, it entered into a correction, okay, and then again. So that time, okay, everything was extremely bullish sentiment. Situation was, means at that time the situation was not kind of situation we are seeing now. Okay, not 5.5%. Okay, the interest rates were not 5.5%. Everything was normal. So we have seen continuous bullish movement. Okay, then finally, okay, so this the bullish movement, okay, very heavy bullish movement, and then finally we have seen a result. Okay, this thing. So that time from the top, if we calculate, okay, this thing, then the decline was approximately 40%. 40% decline. Okay, this has happened, it started to happen in the month of October, and then it came down. Okay, so it all started with January, moved up, small corrections, and then again a bullish movement, and then in the month of October, and then in just 1 month, 40% in just 1 month. Okay, and yes, there was also this what we have called the Black Friday. Okay, Black Friday was there 1987, I guess, or 1990, 1989, 1987. Okay, maybe. Anyway, so I hope this thing is clear, particularly this thing. Okay, 14th, 15th, 16th, right? So now in this, the current scenario, first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 13th, and 14th. This is 14th, right? This is 15th. Okay, what we have seen earlier, 15th was a bullish candle. Okay, 15th. It is not much clearly seen here, but if you look into the S&P 500, okay, 15th was a clear bullish candle. Okay. Now the question is that what will happen to this the 16th? What will happen to the 16th candle? If we follow, okay, this the historical movement, okay, the what we have seen last time in 1987, the 16th was a 7% intraday fall. Okay, so what it indicates? This indicates that if that is to be considered, then at first there must come a gap up open. After the gap up open, there must come a bullish movement, and then see this, the red candle you are seeing, this is not the profit booking, and this is what I mentioned in the beginning of this S&P 500 technical analysis, that this red candle is not the profit booking. Okay, so if there comes a gap up open, immediately upon open, S&P 500 and the Dow Jones moves up, particularly Dow Jones, it moves up, okay, against the technicals, against everything. Okay. And then there will be a very heavy probability of seeing a real profit booking. Last time we have seen 7% intraday fall. Okay, this time I cannot say, okay, there will be a 7% intraday fall or not, but in this case, not 7%, but 3%. Okay, to these are levels, 2.5%, 3%. Yes, this can be expected, and if it moves up further, in total this will be 4%, approximately 4% fall intraday. Okay, see, this is based on what we have seen historically. I'm not saying that 100% this will happen and again a very heavy candle. Okay, but this is as per the historical movement, what we have seen historically. Okay, for that to happen, the condition is that initially it must give this a gap up open. Immediately upon open, or irrespective of any open, immediately upon open, it should move up. Okay, or even if it hesitates, okay, a little, okay, in that case also it should move up, heavily, so that it can open the possibility of the real profit booking. This was not the profit booking. Okay, this was a mild profit booking. The real profit booking means a minimum 2% fall, minimum 2 to 3% fall. That is the real profit booking. Okay, but in general, it comes to 4% or 5% fall. Okay, that is what we consider as the profit booking. Okay, a good and the real profit booking. Question is that what will be after profit booking? Resumption of the bullish trend. Simple. Okay, So generally, okay, this is how it works. So at after some time, profit booking must happen so that they can book their profits. The stock market will come down, then again the buying will start, and once the buying will start, then again it will resume its bullish trend. Okay, this is how it works. Okay, through the patterns. And this is the curious case of Dow Jones. This is what I have already discussed with my Patreon community members on July 27th, even before the open of the stock market. Let's see, this is what is happening in the Dow Jones, and this is what we can see, what we can expect in the Dow Jones. Anyways, let's see, okay, how the things will unfold. But still, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the S&P 500, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the support and resistance levels for the S&P 500. Okay, for this the coming week, that is from July 31st through August 4th. So in the coming week, okay, we have 4658. Okay, but I'm not sure, okay, whether the 4658 will come into the picture. Okay, but still let's keep it like 4658. 4633, yes, 4633 we can definitely we can keep that in the picture, but still not 4633, it is 4609. 4609. 4609. Okay, one more thing, that the high of this candle was 4608. 4608. So 4609 and all of these, then comes, okay, now, so these are the resistance levels. Now there is one more important thing, that the S&P 500 is not going to move up until and unless it breaches and sustains above 4608, or in simple words, it breaches and sustains above 4609. Okay, there is a technical reason for that, that is the bearish engulfing. Okay, so I will discuss this part in the fifth point of the agenda, that is the probable movement. Okay, so that is 4608, 4609. Now let's talk about the support. We have 4573. 4573. This is the first condition. Means if the S&P 500 has to go down, or has to go bearish, or has to move bearish, then 4573, it must remain below 4573. Okay, and 4573 has proved itself. Okay, again and again we have seen that. And see, this is what I earlier mentioned, that this the 4527. Okay, 4527 and then 4573. Okay, we have this the zone, that is the primary zone. Okay, the movement will remain in between this zone until and unless there comes exceptional some news, okay, or earnings, or this the this the FOMC. Okay, so until and unless that comes into the picture, this zone will not be breached. Okay, and then on this the day, okay, the Feds raise the interest rates. We have seen, okay, next day it was able to move up, and then intraday fall. Anyways, 4573, then we have our standard zone, 4527 to 4537. Remember, 4527 to 4537. Okay, now if you look into this, the red candle, okay, this particular red candle, then it closed above 4537 on Thursday. It closed above 4537. Okay, so that was the technical reason, okay, that yes, it has sustained. It came down to 4528, but it gave a reversal and it closed above 4537. So yes, a reversal was seen there. Okay, means technically a reversal. Okay, if not a reversal, so a sustained movement above the zone it was expected. 4537, 4527. Then we have 4497. Then we have 4462. Yes, 4497 is the secondary zone. It is the secondary zone. Okay, primary and secondary zone. So I've discussed this, okay, many a times. Anyways, 4462, 4425. Okay, again this is a standard support and a very good support. Then we have 4396, very good support. 4371, 4343. The very heavy support that comes into the picture, it begins at 4310 and it goes until 4265. Okay, 4310, this is the 61.8% of the Fibonacci retracement level. 4291 is our golden support. Earlier this was the golden resistance, and then 4265. Okay, this is a very heavy support. S&P 500, whatsoever be the case, it is not expected to breach the zone in the next week. Even if there comes 7 to 8% fall, then also it will not be able to breach for whatsoever be the reason. Okay, as of now we are not anticipating that much of heavy fall. Okay, as of now any heavy fall should be handled by 4425. Okay, any heavy fall, and if we measure that fall from the previous closing, then that fall comes around like 3.5%. so 3.5% to 4425 is sufficient or more than sufficient, or at most to 4396. Okay, that will be 4%. 4396, so 4425 or 4396. Okay, so until and unless there comes extremely heavy selling, okay, the S&P 500 will remain above 4396 or 4425. Okay, and from it will come here and then will resume its bullish this is a trend here. Okay, so this is how this thing is going to work. Okay, now whether there will be a very heavy fall, extremely heavy fall or not, okay, a kind of profit booking that we are expecting. Okay, so that will be known only when the S&P 500 and the entire US stock market will come into the session on Monday. So then only it will be known. And guys, if you are my Patreon community member, then in that case, okay, I will tell you that what we are expecting through these are daily updates. Okay, pre-market update, first update, second update, and so on, right? And so guys, if you want to join my Patreon community, then let me tell you that how you can join my Patreon community. Now guys, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you visit that link, then you will see that this is my Patreon page, and there are these the 3 tiers. Okay, so the first and the second tiers are same. This is the daily S&P 500 updates from Monday through Friday. Okay, the third tier is the market opportunities, which are now the part of the daily S&P 500 updates. Okay, so this tier will be discontinued very soon. So the only difference between these 2 tiers is the geographical location. Otherwise these 2 tiers are same. So when you subscribe to these the tiers, okay, any of these the tiers, daily S&P 500 updates, in that case you will get the daily S&P 500 updates from Monday through Friday, pre-market update before the open of the stock market, then first, second, third, fourth updates. Okay, and then the final update, right? Other than that, you will also get the stock market opportunities. The stock market opportunities, minimum 5 to 10 opportunities every week in the premium stocks of the US stock market, the premium stocks of the Dow Jones and the premium stocks of the S&P 500. That is also included in the daily S&P 500 updates. And if you notice that many people have joined my Patreon community for last many days, weeks and months, and they are getting the daily updates, the daily S&P 500 updates from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, you are welcome, and the link is given in the description of the video and also in the comment section. Now guys, let's discuss the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of the agenda is the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Okay, let me write it down. Daily chart. D as in daily chart. Daily chart means that the one candle represents one day, not 1 hour or 1 week, okay, or 1 month. One candle means 1 day. Okay, so if you look into this, the last candle, okay, let's first interpret the candle. So if you look into this, the last candle, okay, the daily candle, it's a small it's a small bullish candle. It's a small bullish candle. Okay, other than that, if you look into, okay, this the previous candle, it was a heavy red candle or heavy bearish candle. This heavy bearish candle has engulfed completely these the previous 3 candles. Then this last candle that was formed on Friday, it was a small bullish candle, and it failed to clear the open or the high of this the previous candle. This means that even though it looks bullish, but the bearish sentiments that were brought into the market, into the US stock market, into the S&P 500 through this the bearish candle are still there. The bearish sentiments are still there, and they are very good. Okay, so now their bearish sentiments are very good, okay, or very heavy, you can say, because this candle failed to clear the open or the high of the previous candle, right? So this does not mean that there are bullish sentiment, but there are bearish sentiments. Okay, so it might look bullish, but still there are bearish sentiments. Now let's talk about these technical indicators. So when we look into the technical indicators, moving averages, okay, Bollinger Bands and Ichimoku cloud, okay, all of these are supporting the bullish trend. Okay, now the problem, because of this very heavy bearish candle, the MACD turned bearish. It is still trading bearish. The stochastic RSI also turned bearish, right? So as of now, S&P 500 is 50-50. It is neither bullish nor bearish. Yes, it is bullish or absolute bullish through the weekly chart, but on the daily chart means this is the lower time frame. Okay, weekly chart means that this is the big picture, but in this the short time frame, like for a week or so, S&P 500 is simply 50-50. It is neither bullish nor bearish. Okay, furthermore, MACD and the stochastic RSI both are trading bearish. Okay, what does that mean? This means that the S&P 500 is bearish through the MACD and the stochastic RSI. Secondly, most important part, if you are my YouTube subscriber, okay, or my community member, Patreon community member for last many weeks, months or years, okay, then you know repeatedly I have given you the proof that whenever the stochastic RSI and the MACD, they are aligned in the same direction, okay, then those kind of sentiments generally take over. Okay, means they simply what we call as the supersede, okay, the other technicals. Okay, now both of these are aligned in the bearish direction. This means that bearish sentiments are heavy as of now. Okay, earlier they were aligned like bullish. In that case, the bullish sentiments were heavy, even okay, even though it was saturated, but still it was holding, right? Means that kind of movement. Now this is the picture. Okay, this is the difference. Now other than that, the S&P 500, okay, it is again overbought. Okay, but it is not heavily overbought, it is just overbought. Other than that, okay, it is hitting the divergence, heavy divergence, historical divergence. So all of these technical indicators are suggesting, okay, particularly MACD and the stochastic RSI, all of the technical indicators are suggesting that now the looks like okay, technically, again I am using the word technically it looks like that the stock market, the S&P 500 and everything is going to take a break, right, before it can resume its this bullish trend that we are expecting in the month of August. Okay, because there is no FOMC meet that can and then secondly the data, and so okay, so okay, other than that the earnings. Okay, so multiple factors, non-technical factors, those are non-technical factors, let me remind you, those are non-technical factors, right? So means as of now it is expected to take a break, right? So I hope this picture is clear, but this is not the entire picture, that is the problem. Okay, so now so where actually the problem is, the problem is coming through the Dow Jones. Now the S&P 500 itself has brought in some problem, okay, some issues, but now the Dow Jones, what is the problem with the Dow Jones? Okay, as usual, overbought, saturated, and so. Okay, that's fine. The real problem is that it is hitting the what we call as absolute saturation. After last time we have seen this kind of situation in October, in August, yes, in April or August 2021. Okay, that kind of saturation. And then what happened? Okay, when that kind of saturation was seen, okay, a break. Okay, there came a break in the market. Okay, means a small correction. Okay, that was seen in the stock market. Okay, that kind of. This means that if the not the S&P 500 but the Dow Jones, if the Dow Jones remains or holds, okay, means if the Dow Jones fails to give any heavy red candle, any heavy bearish candle, in that case what will happen? Okay, in next 1 to 2 days, Monday and Tuesday, just Monday and Tuesday, it will hit the levels that will technically demand a correction like 3% 4% fall. Okay, that kind of minimum. Okay, so 3% or 4% fall I'm not saying that this correction must come, okay, within a day. It might take 2, 3, 4, 5 days, okay. So that a correction, it will be demanded technically, okay. So that is the problem through the Dow Jones. So okay, that is the picture. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and join my Patreon community if you are looking for the daily updates and the daily analysis of the S&P 500 Monday through Friday. Now guys, I'm going to discuss the fifth and the last point of the agenda of this S&P 500 technical analysis. And this the last point of the agenda is the probable movement of S&P 500 from July 31st, 2023 to August 4th, 2023. So what is going to happen in the S&P 500 in the coming week from July 31st, that is Monday, through August 4th, that will be Friday. So I'm going to discuss that thing, okay, here in this the last point of the agenda. So now a few things that you must remember. Okay, the first thing is Dow Jones itself. Okay, this is the primary thing. Okay, you must not forget about the Dow Jones. Okay. Secondary thing is what I mentioned. So first thing is, remember, okay, let me write it down. It is the Dow Jones. Okay, you can also note it down, Dow Jones. Okay, and the problem with the Dow Jones, the second thing is the technical thing with the bearish sentiments and the MACD and the stochastic RSI, which are okay, these two are already bearish. Secondly, S&P 500, okay, it is in the overbought, okay, and this the divergence is extremely heavy, that thing. Okay, so technical things. Okay, the technical things, okay, in the S&P 500, the technical indicators. Third and the most important thing here is Thursday evening, or you can say Friday. Okay, so what is so important about the Thursday evening and Friday? Apple and Amazon are going to post the earnings on Thursday evening, right? This means that the impact of the earnings will be seen on, or will be felt on Friday in all of the indices, in the entire US stock market and in the global stock market, okay, on Friday, right? So until Thursday, so this is the correction, or this the little break that I'm talking about, okay, this may be seen, okay, until Thursday, and then all of a sudden, if there comes like very heavy fall or daily, you know, bearish candles for 3-4 days, and if Apple and Amazon post better than expected earnings, in that case a heavy bullish reversal, okay, on Friday it will be seen. But if there comes, you know, earnings that are not as per the expectations, or if there comes poor guidance, in that case, even if the S&P 500 and Dow Jones will be sustaining, then a sudden fall or a very heavy fall, okay, in this entire stock market, in all of these the indices. So okay, these are the three things. Okay, other than that, next week, weekly jobless claims and non-farm payroll data, okay, some economic data, okay, that will also be published. Okay, so that I will mention, okay, in my pre-market update, okay, when that the data is published to my community members. Okay, I hope these three factors are clear. Now let's talk about the technical movement. Okay, what is going to happen? Before that, you must understand, as of now, the entire stock market is in the bull trend, bullish trend. Okay, this means that even if there comes a fall, okay, that fall will not be seen as the resumption of the bearish trend, okay, but that fall will be seen as a break, okay, because for the S&P 500 and the Dow Jones to to come into this the bearish trend, okay, at first what should happen is that the S&P 500 must, okay, clear the Ichimoku cloud. Okay, this means that S&P 500 must trade below 4250. This is the very first requirement, 4250. Okay, so or 4255. This is the very first requirement. Okay, means the S&P 500 must trade, okay, this side of the Ichimoku cloud. In case of the Dow Jones also must trade accordingly. Okay, and in case of the Dow Jones, it must trade below what is it, 33,550. It must trade below 33,550. As of now this is 35,000. Okay, when that happens, then it will enter into the bearish side. It means the true bearish movement. Okay, so bullish bearish, this is clear. Now yes, one more thing, that you might see that it is coming down for 2 3 4 5 days, so that will be normal. That is a small correction. A correction is demanded by the technicals, because as of now S&P 500, Dow Jones are very heavy, very heavy. Okay, other than that, the stock market is fighting the Feds. Okay, Feds have already raised the rates by 5.5%. Okay, and stock market is still not it has not yet considered, okay, this is a 5.5%. It was rather moving up and again. Even the stock market knew that this will happen 25 bps, but still it was moving up and up. Okay, so it means technically, okay, I'm not talking about the news data. Okay, let's forget about news and data, but technically a correction is demanded, that I have shown you through the technicals, not in the S&P 500 but through the Dow Jones. And because Dow Jones is the primary index, this means that whatever happens in the Dow Jones, this will happen, or this will be replicated in all of the indices. Okay, so there will be only this a percentage change fall. Okay, but again, bullish bearish clear. Now let's talk about what we are expecting, okay, next week. So next week, first of all, in the S&P 500, you need to understand S&P 500, the Dow Jones. Okay, first of all, you need to understand that if on Monday, if the Dow Jones, okay, if it fails to give the historical correction on the 16th day, we have seen, not correction but profit booking. If the Dow Jones fails to give the profit booking on Monday, heavy profit booking on Monday, and if it forms another green candle or any small candle, in that case on Monday it will hit the absolute saturation from where we have seen a correction. Okay, almost, not almost, but every time there comes a correction, okay, it will then hit that particular point. Okay, this will be the trigger. Okay, if it holds on Monday, okay, in that case, anytime from Tuesday onwards, anytime, okay, we can expect that now the Dow Jones and the entire stock market is okay, will enter into a very small, see, I'm not saying very small, but it will enter into a correction that may be like 1% to 7% or 8%. Okay, it will depend actually, how soon the technical indicators okay, how soon they cool down. Okay, and other than that, whether the same thing, if not just the technical indicators in the Dow Jones, but also if they are also cool down in the S&P 500, both of these the indices must follow this the practice. Okay, so Monday and Tuesday, no matter what is happening in the S&P 500 on Monday and Tuesday, but it matters that what is happening in the Dow Jones on Monday and Tuesday. A small candle, red or green, doesn't matter, but a small candle, a thin candle, a small candle, red or green, or a bullish movement on Monday, Tuesday, okay, it will then put the Dow Jones in that particular situation where technically, okay, a correction is demanded. Okay, so now I hope that thing is clear. In case of the S&P 500, as we know, MACD and the stochastic RSI, MACD and the stochastic RSI both are bearish. This means that bearish sentiments are through the technicals. Other than that, this candle that was formed on Friday, this candle failed to clear the engulfing that was given by this red candle. Remember, this one good bearish candle, heavy bearish candle, has engulfed 1, 2 and 3 candles. Okay, that is why there were extremely heavy bearish sentiments, and those bearish sentiments are not yet over. And the result we have seen, because in the absence of these the heavy bearish sentiments, we would have seen a very good the bullish candle. Okay, so there was no doubt about that, but because of the heavy bearish sentiments, okay, the stock market, it failed to give that kind of movement, and even it failed to hit the open of the candle and the high of the candle it made, right? This means that on Monday, even if there comes a gap up open or any kind of open and the S&P 500 try to move up, then at first it has to clear the open of the candle. Open of the candle is approximately 4598. It has to clear the open of the candle. Okay, after the open of the candle, then there comes 4608, the high of the candle, and 4609 is our calculated resistance level. Okay, now in order to move bullish, in order to go bullish, further bullish, the S&P 500 must clear 4609. When I say clear 4609, I mean a sustained movement, a closing above 4609. In case of Dow Jones, this will be 35,600 or 700 something. Okay, so that I will mention in my pre-market update. Okay, on Monday. So that will be there in the Dow Jones. Now, so yes, so if the Dow Jones hit that particular level, okay, in that case, no matter what the S&P 500 is doing, okay, there will be a correction. Okay. Now, yes, so 4609, a sustained movement above 4609 and a closing above 4609 is demanded in if the S&P 500, okay, if it wants to resume its bullish trend. One more thing, that yes, it may happen that the S&P 500 is giving a bullish candle, okay, on Monday, okay, and also on Tuesday you can see that not just a bullish candle but a candle that has actually closed above 4609, okay, on Monday and Tuesday, okay, and we might think that the S&P 500 is going to move up. No, that's not true, because in that case what will happen, the Dow Jones will come into this in this extremely this the bad situation where technically a correction will be demanded. Okay, this means that even though S&P 500 might look like that it is moving up, but no, Dow Jones, because in that case Dow Jones will be extremely heavy and then technically a demanded, okay, this correction will be there. So when the Dow Jones comes down, then the S&P 500 will also drop. Okay, as simple as that. And as of now on the weekly chart, it has even defied, the S&P 500 has defied the moving averages, okay, on the weekly chart. So there is a heavy deviation in the closing, not the closing prices of the candles on the weekly chart and the moving averages on the weekly chart. So heavy deviation. Okay, so we denote that by sigma. Okay, sigma, that is the deviation. Okay. Anyways, so deviation is there. Yes, so this thing is there, this thing is clear, that at first, in order to go bullish, the condition is that it must clear 4598. Okay, clear means close above 4598, then it must close above 4609 in order to move up. Okay, now if there comes two bullish candles, two good bullish candles, Monday and Tuesday, if there comes two good bullish candles, in that case the MACD will change from bearish to bullish, and also I hope the stochastic RSI will also change from bearish to bullish. Okay, so when the stock market comes into the session, okay, then through my updates, okay, I will update you, okay, that if there is a change or not. Okay, because if there comes a change, technical change in the MACD and the stochastic RSI, then only we can expect this the resumption of this bullish trend and further bullish movement. Okay, otherwise not, otherwise that will not happen. Okay, so we will see that what happens on Monday and Tuesday, and accordingly if there comes any change in the MACD and the stochastic RSI. Okay, so that is there on Monday and Tuesday. If it moves up, if the S&P 500 moves up on Monday and Tuesday, or Monday, okay, but it fails on Monday and Tuesday, if it fails, or if it continues to fail on Monday, Tuesday, Wednesday to clear the 4698 at first and 4609, if it fails, continuously fails to clear and to sustain above, okay, these levels, in that case what will happen? In that case, this is an early indication that now the stock market is going to take a break. Okay, it is going to enter into some correction, okay, some fall, and once it comes down, okay, and then only, okay, there will be the resumption of the bullish trend. Okay, but before the S&P 500, the Dow Jones must cool down. Okay, it must give. So historically we have seen like 5% on an average, 5% correction the Dow Jones has given. Okay, particularly when it comes into this particular situation, then on an average 5% or more than 5% correction the Dow Jones has given. Okay, so 5%, if we count the 5% from here, in that case the 5% will be like how much? Okay, just a second. In case of the Dow Jones, that 5% from the closing price will be up to this mark, or 33,600 or 33,500. Yes, okay, in that case it will be coming down to the Ichimoku, and this is where it must sustain, because a movement below, okay, a sustained movement below Ichimoku cloud means the bearish trend will begin, the true bearish trend will begin. Okay, so and at the same time the S&P 500, so that is fine. So this is in the bull side. Now, if it is able to sustain and close above 4609 at the same time, Dow Jones, for some unknown reasons, if the Dow Jones is also sustaining, then yes, S&P 500 can move towards 4633, and then 4658 or so. Okay. Now, in case if the S&P 500 has to come down, if it really has to come down, then at first the primary condition is that it must breach and clear the zone. This zone must be clear. What is the zone? Zone is from 4537 to 4527. Okay, this zone must be cleared, and the S&P 500 must close below. It must close below the zone. Okay, so as long as it is sustaining above the zone, above 4527, it will not come down. And again, last week also I mentioned this thing. It will not come down, it won't come down, no matter what the technical indicators are saying, doesn't matter. As long as it is sustaining above 4527, it is not going to come down, right? So we have seen that there was a bearish candle, and then again a bullish movement. Was a bearish candle, but closing above 4527, again a bullish movement, right? So this is technically, okay, this is the calculated level, very strong level, 4527. So a closing below 4527 must happen, and not just one, there must come two consecutive closings, two successive closings below 4527, because when that will happen, then only it will be confirmed that now the S&P 500 has given up. Okay, and now the S&P 500 is okay, is going to give us, okay, or is going to give this good correction. Okay, that will be like you know, as I mentioned, like 4396 is there, definitely 4396, 4425 is there. Below 4396, then 4291. Okay, and again remember that we have the Ichimoku cloud, and again it can come down to Ichimoku cloud 4265 or so, but a breach and a sustained movement below this the cloud means the resumption of the bearish trend. Okay, but as of now I don't think that the bulls, okay, they would, means yes, they can bring it down to, okay, like here to the cloud, okay, and that everyone might panic and everyone might fear, okay, that now it is coming down, okay, and it is a true bearish movement. No, that will be a correction, okay, a normal bearish movement, but that will not be the true or the long-term bearish movement, right? For the bearish movement to happen, a sustained movement below Ichimoku cloud is demanded. Okay, so it might come here, and then any time from here, okay, a resumption, okay, of this the bullish trend. So anyways, when this thing happens, okay, then we will discuss, okay, this particular case. But as of now, okay, I hope this thing, this particular thing is clear. Now guys, that although we are discussing, okay, these are technical part, okay, this movement, that movement, but you must remember this part, that the S&P 500, Dow Jones, and the entire US stock market, so the month of August, okay, as such there is no bad news scheduled for the stock market, right? This means, and the best part is that the Feds, they are not going to meet in the month of August, right? So FOMC is not there, Feds are not meeting. Okay, other than that, there is no bad news scheduled. Earnings are there, definitely earnings are there, and generally earning season, okay, it goes bullish. See, this is a non-technical thing. Okay, historically we have seen that generally the earnings season, it goes bullish. Okay, this is a non-technical thing. Okay, I repeat. So I'm saying generally, not always, but like 80 to 90% of the time, okay, that goes bullish, the earnings season. Okay, so earnings season is there, FOMC is not there. Okay, economic data, recently we have seen core PCE data, okay, that was better than expected. So as such, there is no bad news there for the stock market, and no bad news even scheduled, until and unless there comes some economic data that goes extremely against the stock market. Okay, because if there comes any the data, okay, economic data that is that goes against the expectations of the Wall Street, and that confirms that the inflation is still not holding, okay, sorry, inflation is not that still the inflation, the chances of seeing the inflation coming down are not good, and still the inflation can give a bullish reversal. If that data comes into the picture, one or two, okay, maybe like, you know, non-farm payroll data and the CPI itself, okay, if that comes into, okay, that kind of thing, okay, seen in the stock market, then that will further confirm that yes, the Feds are further going to raise the interest rates in the month of September. Okay, so that can bring, okay, this is a bearishness in the stock market. Otherwise, non-technically, I repeat, non-technically, there are no reasons that the stock market, okay, is okay, means the stock market should go bearish. Only and only the technical reasons are there. Only and only these are technical reasons, the Dow Jones and S&P 500 that I've discussed in very detail, okay, are there. Only and only the technical reasons are there that can bring the correction in the stock market, that can bring down the stock market. Otherwise, the non-technical reasons, okay, they are all supporting the bullish movement, right? Anyways, we will stick to the technicals, okay, because this is the technical analysis, and non-technical reasons, because we do not control, okay, the numbers, the economic data, okay, and anything. So it's better, okay, to not to comment on that part, okay. And when this thing happen, okay, closing below and this particular thing, and then if you are my Patreon community member, then I will update you. And if you are not yet my Patreon community member, okay, then you can join my Patreon community, and you will get the daily analysis from Monday through Friday, each and everything. Other than that, you will also get the stock market opportunities, minimum 5 to 10 every week in the premium stocks. Okay, so I've given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And other than that, hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 technical analysis for the next week, that is from July 31st, 2023 to August 4th, 2023.